So hi guys, a wonderful good evening to everybody and a warm welcome to our webinar for Admiral Markets, Master the Markets. I hope you're doing good. And today I can see your questions and who is available this evening for our weekly webinar, Master the Markets. So maybe you can give me a short hint if you have the slides and if you can see me and if you can hear me. Maybe you can give me a short technical issue. Is everything fine? Please type it in the chat box. Henrik, thank you very much. Everything fine? Great. Then Thomas, thank you very much. Then let's start with our Master the Markets, our Wednesday evening webinar. Today we want to talk about the markets, of course, and we have a little bit special topic this evening about the correct stop leading or the trailing the stop about when we make movement, not the trend. The correct stop trailing about the stop about trend. We want to talk about next over next week. And yes, Vincenzo, I was on the road. I was traveling, and now I'm back. So, and today we want to talk about the stop trailing and the correct stop leading we make to bar by bar. But first of all, let's talk about the market. And we want to, first of all, the risk disclaimer, you know, the trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. And about the asthma, you know, we have retail clients and professional clients. This is old stuff, and you can switch. We have restrictions about 130 and 120 other currency pairs and CFDs on indices and gold. So your options, you can choose between retail clients and professional clients. And why Admiral Markets you have to choose is, of course, CFD mini contracts starting from 0.01 lots and Forex micro lots, 0.01 point lots, and of course no minimum stop distance. That's the best thing ever we can use at Admiral Markets. That's the reason why you have to choose it. And of course, One World Global Offers. Admiral Markets is available in a lot of countries, Cyprus and a lot of other countries. So let's start. And this is a really important stuff, guys. There's a really important thing how you can survive in trading. First of all, you need rules. You know, this is my special topic every week. And we can talk about a lot of things, guys. We can about news and Trump and May and oh my God, so many other things. But there are two options you can make money. First of all, you have big money. You are one of the market maker, like a broker, like George Soros or something else. Then you can make your own money on the market. That's our first option. If you don't have too much money on your account, you have to choose the other option, and the other option is rules. Statistically proven rules like this one I choose and I use, and that's the reason why I always say success is not a fantasy, it's a formula, especially in trading. So, and I use the Dow theory, and the Dow theory is really easy. Dow theory says movement and correction are the base for a trend, and a trend continuation is always more likely than a trend break. And you see the probabilities, that's numbers about statistic. That means a trend continuation has a probability of almost 65% of every single each trend. And if you make sure that the bigger trend, which is working above of you, maybe you have a signal trade as hourly chart, then the daily chart is your big picture. And if you make sure that you have the support by the big picture, the probabilities rise up to almost 72%. And if you work with rules, with fixed rules, and you don't have to break the rules, that is one of the success basements, then it rises up to almost more than 80%. So this is the basement, the trend, and we want to make trades outcoming of the trend. That's really, really important. So, and that's the rules we use for our trading. Rule number 5 to 7. So make your screenshot, make your picture, whatever. If you want to follow me and my advices, that's my rules. Rule number 5 to 7 describe where we are in the market. If we have a trend, for example, if we are in the movement, if we are in a correction, where we are about the price. Don't forget, we don't work with Euro, US dollar. We don't make trades in DAX or Dow Jones, something else. We trade the price of that underlying. Always the price of one contract, of €1, of $1, something else, the price. And either you have a price which is fair valued or not fair valued. So first of all, rule number 5, we have to figure out where we are about the price. Rule number 6, Fibonacci, we use the most nature mathematic row in the world, in the universe. That's the Fibonacci rules. And with the market profile about the price, we can figure out where are our targets. And this is really important. If you work with targets, you don't have to guess in your trading. It's really easy in that way. So one of the confusions in trading is, what should I do when my trade is in the plus? If we are in loss, we are used to do that. It's normal case every day. But most of the people are getting to sweat if they are in the plus. So what should I do when I am in the plus? So and that's the point why we work with targets. Before we start the trade, we know where is our target placed before I start with the trade. Really important. And the big picture must support us. We use 3 templates. The big picture must run in a own trend, or in a divergence, or we have support and resist anywhere. So that's where we are. So, and rule number 1 to 4 describe how we can get into that special trade. First of all, valid trend is needed. We need a trend. No trend, no trade. Maturity of the trend, maximum 4 trend arms. The more the trend is major, the less chances we have about the trend continuation. So we need a young trend, and we want to make trades outcoming of the correction. That means the correction is to run at least 38%. So, and then if we see we are in a correction, we wait for the rebound in the correction. For that, we use Heikinashi as the balance candle, and the balance candle has a small body and shadows on the lower and the upper side. That means we have the balance from supply and demand, and then we see, okay, the correction will come to an end and the trend continuation will start right now. So that's the rules, and with that rules, please burn it in your minds. Make a screenshot, and always, it's like a template. If you see a trading chance, use this template. Does it fit? Make the trend. It isn't work and the template doesn't fit, switch it to the side, make another value, another underlying for that. Okay. And about the rule number 7, the 3 templates, let me show you. Either we have a trend in daily chart, we can come out of the correction, we can use it in hourly chart as well. Or you have the divergence. That means you have in trend, maybe a short trend, for example. It's the opposite direction if you have a long trend, of course. You have a lower low. Here you can see a lower low and a higher low in the RSI. We use this indicator, your RSI, to figure out if we have a divergence. This is a really one of the strongest technical issues and signals you can use in daily chart, or sometimes in hourly chart. We have a divergence. Or the third template, we have a supply demand, and we can use it for make a trend underneath in the hourly chart. And of course, the trend is your friend always. So let's have a look, and I want to show you, of course, first of all, we use this one. So you see I don't have any running trades, but you see I have all my trends, 1, 2, 3, 4, 5 especially, but this is a real life account. This is a demo account here on Admiral Markets, but I can show you what we did there or what we do there, in which trades we are engaged. And first of all, this is the Australian dollar, Japanese yen. This is called re-entry, because the first one we have been stopped out here with the sharply decreased to the lower side. But here you can see we have a new trend, movement, correction, movement, and here we got into the trade. Let me show you this one. You see here, Australian dollar, Japanese yen. So first of all, you could see we have a first one. This is here we got into first target here. That's the reason why we work with targets. And then we got out here with a stop. And now, because we have, you see it here, we have a really strong divergence. You can see it here. So let's see. You see this blue arrow here, this higher, lower low, but here you can see the higher high. And the market is going to react it here to the upper side. And this situation in the daily chart we use for the hourly chart. And here you could see we have here our trend. There was the balance candle. Let me show you. So there was the balance candle here. We got into that trade here a little bit late, but it's worth enough. And let's see, we reached our first target here. We got into it here, and here was our first target, because we had a 100% of correction. That was the reason we reached our first target very fast with 12 pips, I guess. So, and now we are on track, but our second target is very far away, because we let the market decide how much money we will get in trading. So now, especially, you can see the point of control switched from a 78.60 down to 75.75, and now we are around the point of control. It's a little bit bad, but the situation in daily chart shows us higher prices, and so we let the market decide. My soft stop is placed here, and we will see what will happen here. The next one we are engaged is still Australian Canadian dollar, and this is the same here, Australian Canadian dollar. Here we started here on the lower side, and you see this trend is still working. We are still in a green zone here, and we have a lot of space to go up to the point of control. You see the point of control is placed at 0.94992. So we have a lot of space to go. The point that our stop is placed almost here right now at 0.93. And you can see the trade is working here with the trend. So, and of course, my stop loss is a little bit below. So that's the first target here. You see, we got into the trade here. You see, let me draw it for you that way. No, I will draw it for you a little bit better. So we have here movement, correction, movement, correction, movement, and then correction. And then you see we work with our rules, of course. Movement, that's the Fibonacci. We have, you see, we have a close below the 38%. That's rules. Never break the rules, guys. And here we had our balance candle. Here was the balance candle, this one, 6 p.m. Here we got into first target, you see, red to red. It's amazing. Red to red, here was the first target. And now we trail the stop about the blast 0.3. And now I have to switch my stop loss a little bit deeper. I see back to 93.70. Let's see, a little bit down. So I work with a mantle stop, because that I avoid to get out of the trade with some spikes and so on. So this is Australian dollar, Canadian dollar. We are still in on a real account, of course. because on this side I have Admiral Markets as well, and this is the other PC with a real account. So, and next one is Swiss franc, Japanese yen. We made almost we made re-entries in the Japanese yen again. So in here we had our first chance in Swiss franc, Japanese yen, and it was a winner with the first target here and the exit here around our entry. It was a plus, it was a winner. And now we had a second entry. You see trend, and here we had our first target. This was entry, the balance candle, entry here, first target here today, and now the price came a little bit back. Normal behavior, we are fighting or struggling with the point of low here right now. But the trend is still valid, everything is fine, and we will see what will happen. We never intervene into the trend, never intervene into a trade, because after we reached our first target, we let the market decide what will happen. This is really, really easy, because you cannot know what will happen in the future with your trend or with your trade. So New Zealand dollar, Japanese yen is the next one. You see, it's always the same. That's rules. So we have, you see, we have here divergences in the daily chart. It's always the same. Look at this one. This is here. You can see that's divergence. It's the lower side. Maybe here you can see that's divergence. The market is going to react on it. And you see, we use that situation in the daily chart, in hourly chart, with the trend, with a balanced candle, entry, first target, red to red, first target reached, everything fine. So, and yes, we talk about all this, we prepare this trade always on Monday. And I created a special group called Battle of Titans. And if you want to become a part of this project, please write me an email. I will help you, and we'll create a new project with Admiral Markets together in the next weeks. And but if you want to see how we make this trades through the whole week, and if you are interested on it, write me an email. I can give you more answers and information about this project, Battle of Titans. It's open for everyone, of course. But it's necessary that you have a real life account at Admiral Markets, of course. Then you can be a part of Battle of Titans, of course. So let's see. That's the point in this kind. So new trading chances. Let's see. We prepared something this week. Australian, Canadian, Japanese yen as well. So let's see, Canadian, Japanese yen. So you see, there was our chance here, the trend, and you see this is the expert advisor. It makes it automatically about our rules. Trend, correction, 38%, balance candle, and then got in. So, and now the trend is almost broken here, not yet. And here you can see why I always work with mental stop or soft stop, because my initial stop, the broken nose, is always deeper or far away. And at the correct point, I work with mental stop or soft stops or alert maybe, because you see the price gonna try to break the trend, but not with a close. The trend is broken if you see a close below, in this case 80.68, for example. So work for a close. Only we have a close, then the trend is broken. So for the rest of the week, tomorrow we expect the rate decision of the euro from the ECB. We will see what will happen. So I don't want to open the trade. You see, the trends are a little bit too old. We are still in a green zone. So, and now you see here in euro, Japanese yen, if we will have a close at maybe 7 around below 121.639, then the trend is broken, but not yet. We need a close. This is really important for your own trading, that you work with closes, with close prices, below to figure out the trend break, or the trend continuation. It's the same. A trend continuation, not here. That's the point 2. Just here for a close below in that for a short trend. So my email address, of course, I will type it here in the chat box. It's info@dowhow-trading.com. It's in the chat box, Robert, and then you can write me and I can give you more information about that. So let's see. Today, it's our master markets. Let's see about the markets. Actually, let's talk about a little bit the markets. The Dow Jones, you see, and the point is, my point is, why I created a new project with Admiral Markets as well to the next weeks is I'm engaged in trading since 20 years right now. And I know we have a lot of webinars around the world. And to be honest, most of the webinars are really, come on, really boring. We're talking about indicators and oscillators and something stuff and bells and stuff. Oh my God, too many questions, too many topics we talk about in webinars. But maybe you know I have my own trading community. It's called Dow How Family. We are a little bit more than 100 people in that Dow How community, and the secret is what is after the webinar. We know the ASMA numbers, almost more than 80% lose money due or about trading. What's the reason why people lose so much money in trading? Of course, no rules, no discipline, and no community, no coach, no mentor, no guide. You're sitting alone, you're sitting in front of your PC mostly alone. Okay, we have webinars. So now, for example, Admiral canceled the webinars on Thursday, the English at 11. So, but we're gonna create a new project. Of course, be a little patient. We will inform you. Admiral Markets, we create really new projects with new topics to help you. But my question is always, what comes after the webinar? So maybe we are done at 6:45. You saw my rules. You saw some proposals. We're preparing some trades. But we cannot make live trading in this webinar because my rules doesn't fit right now. Not yet, not due that webinar. So my point of view is that we have, or as a coach, we have to make sure that we can support you after the webinar. You need a community around you. You need a chat box. You need a group or something else where you can get in, where you can ask your questions. Do we have now, maybe the signal in whatever, maybe later. The signal comes at 10 p.m. or tomorrow 8 a.m. But we don't have a webinar tomorrow at 8. And we don't have a webinar at 10 p.m. But then our signal comes, or the signal comes then. What should we do now? That is my intention, that we can create a community like my Dow How family, that we can support you in trading as long as you're gonna be stable by yourself. Maybe this will take one year maybe. In my experience, if you have rules, if you have a community around you, if you have support by that, most of my clients need around 1 year to become successful in trading by discipline, by support. And that is one of the reasons why I'm going to create with Admiral Markets new projects. We want to catch you after the webinar. What do you think about that idea? Would it be good that you have a contact person you can ask after the webinar? What do you think about it? Type it in the chat box, please. It's a really interesting question for if you didn't hear something about that idea. But this is my point. What shall we do after the webinar? Can we support you there a little bit better? And this is my point of view, that we can help you to support you after the webinar. So let's come back to the market here right now. And you can see we have a trend in the Dow Jones. And you see we were so deep in the green zone. And the point of control were placed here at 25,603 points. So, and you see what happened in the past. Since the last 2 days, we have a strong increase to the upper side. We reached the point of control almost. We are still on track to the point of control. And that's the point why I always tell you every week, stick to the rules. Be aware about the trend and the price, and you can be successful in trading. The rest of trading is taking place in your mind, with the challenge to accept the losses if you stuck to the rules always, and then you can become successful in trading. Point of contract would be great, as I have had a rotten time trading recently. Of course, Robert, this is write me an email and I'm gonna help you, but you should know that we work on a great project with Admiral Markets together, that we can support you in a better way. Okay, so, and you see we are on track. The same procedure is almost in the NASDAQ, for example. So you see we were very deep in the green zone, and we are still on track. Point of control in hourly chart is 7349 points, and we have a correction right now, but now we are a little bit stabilizing here, and I think we are on track back to the red zone, to the point of control. And the same in S&P 500. So you see that we reached already our point of control. Let's switch it right now, the last hour, back to here. Where is it? It's 22,814 points. And you see the triple bottom on the lower side, trend, and then go up. And you see it's always the same, guys. It's always the same. Yeah, green zone, unfair value price, and the price wants to go back to fair price. Guys, that's nature things in trading. And that's the reason why we work in communities. And thank you, Dan. Really, thank you. I'm very grateful for your answer. And I will give it to Admiral Markets as well. And so this is the point. I made the experience in the past years. There exists a lot of communities around the world, but maybe you have your own experience about that. If you visit some communities, one is barking short, the other is crying long. This one tells you you have to use this indicator. The other guy says, the other guru says, oh, no, you have to use this one, volume trading, or this one. This is overwhelming for our minds. That doesn't work. I had the experience in the past so often. And in my family or in our new projects, so for example, Battle of Titans, or the new project with Admiral Markets, be excited, it's coming soon. We want to make it differently, because all guys in that new project working on the same page. One setup, 7 rules, same entries, same exits, same experience, same trades, all together. How does it sound for you? All together do the same. Yes. And to see, we have probabilities on our side. A trend continuation has a probability of almost 72%. And with the rules, Fibonacci, and price profile, we have more than 85% of probabilities. That's enough to make trades and to become successful in trading. And I will inform you as soon as it starts. And you can come in the current Battle of Titans project. As I said, write me an email and you can get into the trade. And this is my experience the last 20 years. If we can make all together the same thing. We lose together, we can motivate us together, and we can be happy together if we are on track. And I promise you, it's a really, really good thing to work together, not to against each other. That doesn't work in trading. Come on, be honest, trading is such a fucking hard thing. It's overwhelming for our mind. We are not educated to thinking like trading, to make everything right and to lose money on the other hand. That doesn't work in our mind. This is the real challenge that's taking place in your mind. But if you have a community around you and all of them make the same experience, it's going to be better for your feeling. And you can ask someone, for example, do I make everything right? Can I ask you something? And I give you as a head coach, all my other titans that support me in that project, they will give you an answer. Maybe that, and I promise you that really works. And with that new project, together with Atmer Markets, we want to make a revolution in the trading industry. And you can be a part of that. And I'm happy if you are willing to support me in that way. My special topic today is, and I've used to make it a little bit easier, sorry for Atmer Markets, but to make it a little bit easier, I want to show you about a special topic this evening, how to trail the stop in a correct way. So there are different ways how you can trail your stop. It depends what do you make for kind of trades, trend or movement or breakout. So the last minutes we want to focus on if you make movement trading. Movement trading means you trail the stop by candle or period by period. For example, let's see, let's see, and we use whatever. Should we do FDAX, for example? Where is it? Where the FDAX? So let's see. It's gonna be away. Okay. However, let's use US dollar Swiss franc. So, for example, so I will show you here. So this one. Okay, so if you want to make your trading, or if you want to trail your stop, and this is really important, by movement. And movement means you trail your stop. Maybe if you make here, you got into your trade, maybe here at the breakout, here at the point 2. So you have your trend, of course, and you want to come into that trade here, for example. That means you make you trail your stop by candle, but be careful about that, because you have inside bars and outside bars, and this is really important because this is a daily chart right now, but inside of one daily candle, you know, there exists its own trend, maybe in hourly chart, for example. So, and the hourly chart works in its own trend, for example. So that's the reason why you have to be aware about inside bars and outside bars. And I can, let's see, I can make it visible for you about inside bar and outside bars. You see? So, and maybe you trail your stop. So you go into the trade here by this breakout. So you start with your first stop below this entry candle here. This is your entry candle. If you start your trade by a breakout above the point 2. Okay. So feel free, guys. If you have questions, please interrupt me and type it in the chat box. I can see here. We work together. I want that you learn something about that. So if you want to make a trade, let's see, make it a little bit this one. So breakout. That means you got in, you went into the trade by a breakout by the last point 2. So you trail your stop, but now you can see the next candle is this one, is an inside bar. So you see, this is the border, low and the high. And you see the next candle closed, or the next candle closes inside of the previous candle. This is the outside bar, and you see this is the inside bar. So, and now you have, if you start with your first stop here with your entry, and you have an inside bar, and now be careful, it's really important, because you know the inside of such a day trading or a day candle, that it's its own trend by the underneath hourly chart or 5-minute chart or something else. In that case, you have to trail your stop one candle before, went back with your stop to the next lower candle, that the trend inside of one candle has space to correct, that you don't get out with a stop with a spike or something else. That's the real point. Can you please explain what is a rent and what is a trend and what is a breakout, then you in advance? A breakout is if you have your entry, maybe you have your pending order, Mustafa, you have your pending order, you want to make a long trade, of course, and you speculate on a breakout, especially at the last high. You think or you are sure the trend will continue, so this is a trend. Maybe, let's see, this is the trend. This is a trend. So trend means higher highs and higher lows. This is a trend. So this is a special topic. We are gonna forward with other topics due this education series. You are right, we are a little bit in advance, but we repeat it always, no problem. And with the new project, you will learn it, no problem. A little bit patient. So breakout means you speculate on a trend continuation, and now, but this is really important. You see, this yellow rectangle means you have inside bars. The next candles, 1, 2, 3, 4, closes inside of this outside bar. That's the extension from the lower side to the upper side, and all the next 4 candles closes inside of the average or of this extension of this outside bar. And if you have an inside bar, you have to get back your stop 1 candle before. So how you trail the stop if you have a higher high? So, and now you can see with the next candle, this is this one, you have a close above the high of this outside bar. So, and then if you have a close in that, in long, in short is the opposite direction, of course, then you can trail your stop to the next outside bar, which has a close above, in long, of course, the last outside bar. So then you see the next candle. Oh my God, it's an inside bar again. What do you have to do now? You have to get back your stop. What? Come on, your nah. Come on, work with me, honey. Okay, where's the problem? Okay, let's take another one. So you have to get back your stop here, and you see what happened. You see what happened here. Latest, not with your, if you work with soft stop or mantle stop, then you don't get out here. It's only a spike, not here, not here, just here. You have here the close. And now I have a trick for you. I have a really great trick for you. If you work with soft stop, What does it mean when I tell you about soft stop? Soft stop is a stop the broker doesn't know. The broker only knows your hard stop, your initial stop. And in my trading, and this is your hidden stop, yes, or in that case, the real stop is always far away, where I count my money management, my risk, maybe 1%. But my real stop, the technical correct stop, is maybe outside inside bars, but it works only with closes. So, and now here we are. You have the next inside bar. You take your stop and get it one candle back to the previous candle, a little bit deeper. And you see, only if you have a close below this soft stop, maybe you can, in MetaTrader, you can use with an alert, and you can give you a notification or email, yes, but don't work with the initial stop at the correct point, at the correct stop, because the broker knows it, and the market knows it, and you see they try to break it. You see they try to break it, and here you have a close, and then if you have your initial stop far away, then you put your initial stop to the lower low or to the low of the candle here, but you are still inside in that trade. You don't get out. You don't stop out in that trade if you work with a hidden stop. And you see the trend now, the initial stop the broker knows is here, but you're still in that trade. And now you wait if the trade is going on and your soft stop is taking place here already. Your initial stop is taking place here, and now it go on and go on. And now you see, now you can trail your next stop, initial stop or soft stop to the next outside bar. That means here to that candle. Guys, this is advanced trading. This is trading with smart trading, because you know how the market works, how the broker works. It's a little bit secret. This share my secrets, my experience with you, and this is a kind of how we work in Battle of Titans, and in these groups we work together, you know. So, and now you see the next candle, like this one, is an inside bar. It close, you have a close inside of this previous outside candle. Now you take your mantle stop or your alert and take it one candle back, and then you see what will happen again. Come back, and only here, then you get out of the trade. Then you get out. But here you have the chance that the trend will continue. And that means if you work with movement or candle by candle with inside and outside bars. Do banks and some brokers do stop hunting? No, not today. We are too far in the century of trading. It's too clear, and the broker have to work very open. But the market knows that so much and so many traders are placed their stops exactly under the candle or exactly under the 0.3 or the last low, exactly there. And the market goes, the market tries to figure out where are the stops. And with that, with such, you see, with such spikes, the market tries to figure out, will there come more sellers in the market? And that earlier I would say it's stop hunting. Today, with my experience, I tell it's not stop hunting. It's only that try to figure out if there will come more buyers or sellers in the market. And I try to try to figure out and work and handle that the points and always the same. It's on the lowest and the lower side and the upper side. It's always how the market works. That try to figure out, is there more money on the sideline which will come into that market and to break the trend or to continue that trend. And for that, you should work with the initial stop, the broker knows, where you count your money management about the money, but of the real stop, where the stop should be placed, maybe balance by balance, candle by candle with inside and outside bars, I explained to you, or by a trend we talk about over next week, because next week I'm in Barcelona. I worked with in a voluntary for the German Football Association to support kids in football school there. And over next week, we're going to continue with Master the Markets. And then I want to explain you how you can trail your stop by a trend. Could we work with mental stop? If you are fit in trading, yes. And if you are engaged in our new project, then I will help you to stick to that rules. But it's about your own processing, for example. But it's a proposal to work with mental stop. So you can avoid to get out of the trade by such spikes. That's the right word. Okay, guys, that was my little education stuff for this Master the Markets by Admiral Markets. And of course, I hope you learned something a little bit about movement, trailing the stop by inside and outside bars, and the top secret, the mental stop. I hope you were satisfied with that. Maybe you can give positive feedback to Admiral Markets. We will see each other over next week, not next week, over next week on Wednesday, the same time, 6 p.m. And maybe you will give me an answer, or you write me an email about the groups I created already you can get into, and then we can work together outside the webinars, supported, of course, by Admiral Markets. So, guys, have a nice evening. Thanks for your time. Thanks for your lifetime. And don't forget, the journey is the reward. Bye-bye, guys.